Welcome to Wednesday's Market Sit Rep here at Top Gun Options and T3 Live. Matthew Buckley, the Chief Options Strategist, and going to be heading out to Denver today to work with Manheim, once again the large auto auction retailer. So been pretty interesting working with Manheim in Baltimore, Chicago, Detroit, San Diego, or actually SoCal, the entire SoCal region, and also now Denver, which is the Pacific Northwest, and seeing really what they're seeing, getting their take on what's going on in the economy domestically here in the United States. So really getting a boots on the ground, front eye look into what's going on, and it's not necessarily good. And we'll talk about some transports here in a second here, but obviously, the biggest news in our sit rep today is what's going on in Russia. I mean, the 17% rise in interest rates was shocking, and it really didn't do that much. It kind of did towards the end. The ruble dollar kind of recovered towards the end of the day. But I got to tell you, it's not stopping the slide. Okay, they really have seen a perfect storm of implosion in gas and in oil. They've seen the sanctions really starting to bite. They've seen the ruble implode. They've seen this is a perfect storm, putting Russia against the ropes. And as we briefed yesterday in the sit rep, Russia against the ropes is a very, very dangerous thing. Now, I fully support, and the president signed a further tightening of the sanctions yesterday. Fully support the president on this. Well done. Let's keep an eye on let's keep an eye on the strategic objective here, but be very, very careful and identify the threats. A caged Putin backed into a corner is not necessarily a good thing. Okay, so we need to walk softly here and be prepared for any response. Let's remember how World War II started, at least on the Pacific front, right? If you don't know how Pearl Harbor started or the reasons the Japanese attacked Pearl Harbor, give it a quick read today after you get off my sit rep, and you'll figure out that it was oil. And Putin could do a lot of things. He could invade a different country around his yard. He could invade Ukraine even more. He could literally cut off oil supply, gas supply to Europe. He could do a lot of things. The guy's got a lot of nuclear weapons. He's a thug, and it's going to be interesting to see what happens. But as far as on the money side, they could literally start selling gold. They're already starting to sell some of their foreign assets. They own a lot of treasuries. They could even come up with capital controls, folks. If there's going to be a rush on the bank, even Apple yesterday curbed Russian sales. They stopped their online sales. And McDonald's is going through the roof with price increases. So if the Russian population starts to make a run on the bank, get ready for asset controls and capital controls. That's the first sign of truly being the end. So that's on my radar. This is very interesting. FedEx, big miss across the board. Absolutely stunning miss, especially because FedEx, and full disclosure, I flew for FedEx for 10 months and hated it. Showing up to work at midnight and flying till 7 or 8 in the morning, landing in Albuquerque and trying to sleep during the day was not for me. Full disclosure, so I flew for FedEx, but I got to tell you, when they miss, and guess what? 90% of FedEx is probably Jet A and jet fuel and crude and their trucks and everything like that. The fact that energy costs have imploded, and FedEx has as well, is a bad sign. Financials and transports tend to lead us into and out of these economic Vietnams that we're in, okay? Not only did FedEx implode, but the BDI, the Baltic Dry Index, okay? That's me going for a run down the beach in Fort Lauderdale or down in Miami and just shipping traffic, right? If we're not moving stuff, either immediate stuff overnight via FedEx, important documents, or the G.I. Joe with the Kung Fu grip, or we're not moving big stuff with ships, container ships, and if that stuff ain't moving, if transports are rolling over, we're in a hurt locker here, okay? So watching that as well, that was an interesting miss out of FedEx. And obviously today the biggest thing on the radar is the Fed meeting this afternoon. Everybody's going to be looking at every word. The biggest two words in our history right now is considerable time. Okay? They're expected to drop the statement, we're going to keep rates low for an extended, considerable period of time, blah, blah, blah. That means that's code for we're going to keep interest rates low until the cows come home. If they drop that, which they have to eventually, folks, death taxes and interest rates, it's got to happen. We are going to see a rise in interest rates. You can bet on it. And the Fed has to actually prep the battlefield a little bit for this interest rate rise. They can't come out in a Fed meeting and go, oh, by the way, we're raising interest rates, 25 bips or something like that. That would be stunning. The markets would implode. Mass hysteria, cats and dogs living together. So they have to do this eventually. So now, just like we played Guess the Taper under Bernanke, which Fed meeting was he going to start tapering at? This is the time where we're going to have guess the language drop, and then after that, guess the interest rate rise. Okay, we'll see what they have to say about the labor market, the oil prices, inflation expectations, which, my God, the 2% target inflation rate, we'd love to see that right now, right? I mean, we've been running around in this deflationary environment. And then what their outlook is for overseas. What's really crazy to me, folks, is, looking around the world, we might be the best house in a really bad neighborhood. But the Fed's accommodative monetary policy, this zero rip or whatever you want to call it, that we've been living under. Could you imagine if we didn't have these low interest rates right now? Could you imagine if we've been in, quote, real world, what our deficit would look like? I mean, we are seeing anemic growth, if anything, under the current administration's policies. Could you imagine if things were actually, quote, normal? How much of an implosion would we be seeing right now? These near zero interest rates have been a godsend to the United States government, right? Because we actually pay interest on our debt, don't we? Do you imagine if interest rates rise back to a normal or even get up to around where the Fed wants them? We're going to be bankrupt, more bankrupt, okay? And the Ponzi scheme known as the United States government might actually see the light of day. But I digress. Okay, so we'll see. Futures are indicating a little bit higher today. They're mixed. We should see us get off the mat a little bit. But again, all eyes are on Russia. What their next steps are. Are they going to start selling gold? Treasuries? Are they going to start seizing foreign, companies on Russian soil? We're going to see a run on the bank. All bets are off, folks. So make sure you keep your powder dry. Make sure you're flying around with an injection seat in this market because it can turn very, very quickly. And as you guys know, markets go down a hell of a lot faster than they go up, okay? So I'll be back with Thursday's market sit rep from Denver. So have a great day, and I'll talk to you